The so-called FANG stocks, Facebook, Amazon, Netflix, Google's parent Alphabet, plus Apple, they have a combined, listen to this, they have a combined market cap of $2.5 trillion. They're up an average 32% this year. They're so expensive. Do investors at these levels have a shot of getting in? We're going to ask Pacer ETFs President Sean O'Hara. Hey, Sean.
How are you?
I'm great. How are you?
I'm doing great.
How are these FANG stocks doing?
Well, I was looking at this the other day because I hear all this expensive stuff. It's not $19.99 today.
That's good.
Amazon's revenue today is about $148 billion. The entire revenue for the entire NASDAQ 100 in 1999 was $298. When you add Facebook, Apple, Netflix, Google, their revenue goes up to $1.2 trillion as just 4 or 5 companies, and the market cap of the NASDAQ 100 is only like $6 trillion today. So you can't be in this market, I don't think, unless you have some exposure to them. The best way to get exposure, if you don't want to pay $1,000 for Amazon stock, or $1,000 for Apple, or $150 for Apple, or you know, you could buy an ETF that would give you that exposure. There's 3 ways to play this with ETFs: QQQ, which is just a market cap weighted; QQQE, which is an equal weighted version of the index, which I wouldn't recommend today because all the returns are in the big names, and when you equal weight, you lower your weight to that. Or PTNQ, which is one of ours, which uses the same base index on a cap weighted basis, but puts some downside protection. So if you're worried about the prices being too high, but you still don't want to miss out, I mean, the NASDAQ 100 is up about 18–19% year to date, when the S&P is up 5 to 7%.
How do you keep all these numbers straight? I'm gonna bottom line this for you. Amazon specifically, it's just in so many things. It's a tech company, it's a consumer company. I think that's why it might have some room to run as well. Do you think investors were playing defense at all today?
I think the market's probably just taken a little bit of a breather. I mean, there was so much anticipation for what the president was going to do: tax reform, healthcare reform, regulatory reform. Maybe things got a little too excited. But personally, the environment for stocks is pretty good right now. Earnings in the first quarter, I think, were up 14%. So even if we don't get that stuff immediately like we want it, like we forget Ronald Reagan, it took him almost 3 years to get this stuff done.
Pick 2: Qatar, ECB decision on rates, Fed, Jim Comey testimony. What are you most concerned about?
I'm not concerned. Fed rates probably more than anything, because if they don't stick to their plan, then that'll make people think something's not going right.
And they start their meeting 1 week from today. The Dow is down 42 points. Thank you, Sean O'Hara, for your time.